day, Warriors. I'm Dale Pinkert. I'm your host here in face. Anyone have a smile on their face today? Hi, Dan. How are you? Bilbo, how are you? Ziggy, everybody. So, although it's turnaround Tuesday, I'm looking for things to fade. And I look at the dollar index and the continuation move to the downside, and that we're headed towards that key area of 97.5 that we've been watching for because of Nick's call. The harmonic going down to about 97.70. Yesterday, Peter Goodburn talked about 97.5. So although we can rebound here, we're, very oversold. This momentum reading holds me back from doing so. So even if we do get a bounce here in the dollar, I expect it to be revisited and taken out. This is a pretty negative reading of 17 on the RSI. A little bit too much. Thank you very much, Nigel. I also have to give Nick credit. And since you bring up Euro Pound, I want to go to that in a minute. But guys, give me a why if you understand that even though we might get a price rebound here on the Dixie, that this type of confirmed low with a reading under 20 shows so much downside momentum that it's very difficult to fade. Very difficult to fade with this type of momentum to the downside. Okay, and Nigel, although you're congratulating me, if you're long Euro Pound, we have a nice view. I'll share this, comes out of Basic Technical, which is Stephen Blake showing Euro Pound approaching a major trend line here, very overbought readings. So up here between here and 86, not a bad idea if you've been riding it for a week or so to ring the register, at least on a partial position. Give me a why if you understand the rationale. So we're approaching some major trend line resistance. They're highlighting this overbought. Doesn't mean that this is going to be the end of the move, but nothing wrong with taking profits, liquidating the position into extreme strength. You missed the giant trend line. You're very welcome, Bilbo. So here's a look from our research, and this is a Basic Technical. It kind of lines up with one of the areas that Nicola Duke was looking for. So I also want to talk about the euro yen. Although it could come off, it's blown out the divergence here on the 4 hour. Definitely blew it out on the 1. And who remembers me saying yesterday, you should stick with what got you there, okay? Because the guppy rallied to 47 last night and failed. We could make another trip up here towards 47. This is 1, this is 2, but I still remain negative. So selling the rally in the guppy, which was lifted by dollar weakness. To me, I still think we have lower levels to go in the guppy. So if there is another opportunity to short this thing up around the 47 level in the next day or so, I'd go with it. That was probably it yesterday, last night, but we could still get some type of A, B, C up towards 47 again. Your risk is over 48. You have to get out of the way over 48. Aussie yen still trying to be patient for Steve's target up here around 85.80, and Kiwi yen still could have another push-up towards the 78.60 level. So I do not see a lot to fade. The Canadian is following through to the downside. All right, we're finally attacking this 136 level here. It's been well contained at previous support. Its new resistance at 6.5. I do think we're going to head toward this 35.20, possibly even the 34 range. So I'm not a buyer here yet. I think they're going to penetrate this 36 level. We'll see. And, you know, everyone's looking at the euro. It's just exploding, right? It could have been a 1, 2, 3, but like I said, it's the inverse of the dollar. You can't fade a market that has an over, I think it's over 80, this reading here. Here we are. Perhaps the euro pulls a pound up with it one more time. Maybe we're going to get one more push up. 29.50 is containing it. Everyone doing okay? So I really don't have any huge turnaround. I really don't have any aggressive turnaround Tuesday candidates. I'm not sure if it is going to be a turnaround Tuesday. Also, I do want to keep you focused on the S&Ps here.
Hey Dale, it's Blake.
Hi Blake, how are you?
Good, good. Just want to let you know I got a couple of things that I'd like to bring, but you go ahead and talk a little bit.
I was going to wrap it with, I still think the S&Ps are going to try the 24.15 level up here in the next couple of days, but I think it's going to be a decent shot for a top pick. So great call yesterday saying that the euro yen could accelerate. You were absolutely right. It did accelerate. I think we talked about what 127 being a possibility when you were showing the euro yen.
The euro yen looks extremely bullish. I mean, it's in breakout territory, and I mean it looks like it could head up to 126.75, 127 without much of an issue. The euro, I was actually quite surprised at the rally overnight in the euro. You know, I wasn't expecting it, and I wasn't trading it either. I woke up and I'm like, oh, it's been a quiet night, and then I looked at the euro. I'm like, whoa, I had no idea that the euro had rallied so aggressively. But you know, after closer inspection, I mean, the euro has, you know, you pointed out that chart of the euro pound, and let me go ahead and I'm going to grab the charts from you real quick.
Okay, bud.
Let's see here. All right. Okay. So here, here's the euro yen. I just had this up on the screen, and as you can see in the euro yen, we are, you know, obviously in rally mode. We have previous support, current resistance should be, you know, around the 127 level, somewhere around here. You know, I could probably drop that down just a little bit. And actually, let me see, what is that low? That low is 126.09. Yeah, 126.09, and we're getting close to that. So I mean, you know, anywhere between this 126, maybe 127, probably going to find some resistance. I mean, we are obviously overbought on the dailies. This move right here has been enough to squeeze out most shorts in the market, I would think. But what I'm looking at is the euro pound, and that chart that I did, that was the one that I did send out this morning. I've already started to. Thanks. You know, I already started to nibble my way short into the euro pound. I don't know if I don't know how much higher we're going to get. Maybe around 86 pence. You know, we could very easily even take those stops above 86, just enough to frustrate anybody who's short. So you got to be careful about getting too aggressive up here. But we have the there's a 161% extension of this move that we're currently trading at right now at this 85, 86 level. And then there's this 618 of this move here of the high to low, and that's also previous support. So, you know, and trend line resistance. So, you know, I think that the euro pound's probably going to find some sort of resistance up here. So you got to pay pretty close attention to that.
So then you'd be in agreement, anyone that took Nick's harmonic signal when it was into the gap yesterday, that a good time to take some pips off the table up here, if not to reverse, at least to liquidate longs with almost a couple hundred pips on that active formation.
Yeah, exactly. You got to think, okay, you know, it's had a really good move. We're up into a truckload of resistance up here. So it would be smart to be, you know, looking to book some profits, move stops to break even, you know, take partial profits, you know, something that's proactive. That to me, it makes a lot of sense. Like I said, you got people like me that are like looking to establish new and fresh short positions because the risk reward here is good to be short, and that's why I'm like I don't mind, you know, nibbling a little bit here as we're coming into the 86 pence level. Now, right. There's a couple other things that I have on my screen. Is the U.S. dollar Canadian has come down, and we're approaching really that key. This is a lot of key resistance here, or excuse me, key support. If you take, let me grab a little rectangle.
You know, really, when you think about it, all the dollar weakness that we've had to only generate this kind of pullback, it makes you think what would happen to Canada if the dollar caught a bid, if it can't really go down with the dollar getting hammered.
Yeah, you know, that we call that, you know, divergence of correlations, and that's exactly right, Dale. I mean, we've had a very minor pullback in the Canadian based on how weak the dollar has been. Now, as far as the Canadian goes, and you know, a couple traders that I chat with are pointing out that the Canadian, the COT data is, you know, we have an record level of Canadian shorts. So so that's a little concerning, but there's going to be a lot of support down here regardless, okay, just from a technical perspective. So you got to watch this dollar Canadian as we approach here. I have some bids that are below the market. Haven't got hit yet. I was looking for a bid at 90, and we've been as low as 97 thus far. So you know, I thought we might get down to 90, and we still might even get down to 90 as well. I think a lot of this depends on crude oil. Crude still is holding a pretty good bid as well. But watch the Canadian. Let's see.
Yeah, I mean, you put those two things together, a weak dollar and a strong crude oil market that could only generate a 200-point decline in Canada, and you're right, unless it's a delayed reaction, delayed fuse, it's been holding up great in the face of those two correlations.
Yeah, it really has. You know what else I would be watching today, and I know I talked about this yesterday, and I talked about it over the weekend, is I'd be watching the bond market. This is the this is the 10-year, and you can see that the bond market is, we had a nice little hammer here on the 4-hour chart. Now, I don't expect bonds to break out unless equities get weak, but at the same time, I have to say that the bond market is holding up very, very well, which we could have a, you know, bull flag.
Yeah.
Yeah, it's possible. And coming out of a descending wedge, it makes sense to me. And again, if, let's say, you know, since it is Tuesday, let's say we get a little bit of a turnaround Tuesday, you know, there's a good chance that this could happen.
Yeah.
You know, and we see a rally that looks something like this in the bond market. Now, if that happens, then you have to start looking at like the dollar yen. I mean, this dollar yen, I mean, look at equities are rallying to all-time highs this morning.
Yeah.
Dollar yen is not following, okay? It is not following. So if the dollar yen is not going higher when we're at all-time highs, if we fail today, if equities fail today, then that means this dollar yen is probably going to do, you know, what we were thinking about anyway.
Yeah.
You know, we're probably going to do something like this.
Yeah, Volgey's looking for that too, a pull back to that trend line.
Yeah, I mean, again, this is just a simple look. It's not following through to the upside. Okay, it's actually pulling lower. So what happens if equities pull back? Not saying that they're going to, I'm just saying if they do. If the bond market rallies, what happens here? Then there's a good chance that we see a little bit of a pullback in the dollar yen. And that's, you know, kind of what I'm looking at just in case we do start to see a rally in bonds and we do see a little bit of a pullback in equities. We might see we might see a little give back of this dollar yen. Remember, it's still bullish coming out of this
Right.
big down channel. So I would think that the downside, if there is any downside, it is fairly limited. But it's, you know, it's obviously entirely possible.
I hate to do this to you, Blake, but I saw your video on why I hate trading the British pound. All right.
Yeah,
great video. And you know what, you got out great on cable crosses, and they've been coming in a little bit. So you know, if you wouldn't mind touching upon, I'm thinking that you're looking for re-entries eventually on some of these cable crosses, because I don't think your long-term view has shifted.
No, they haven't, but I haven't seen any material pullback either. I mean, like, here's the pound New Zealand, and the pound New Zealand is just kind of steadily holding up. I mean, you can see I really haven't, you know, I should probably delete a lot of this stuff because, you know, right now, it's, you know, all this stuff is irrelevant, right?
Yeah.
So I mean, I would think that any type of pullback in the pound crosses would be nice, but then, you know, the risk is, okay, well, let's say the pound crosses pull back a little bit. You know, what does that do to the pound? How does that shift the structure of the cable? You know, that's what I'm more concerned about. It's like, okay, well, if you've seen the pound New Zealand come down here, let's just say it comes down here to, you know, 183, 184. What is it, you know, what happens to the pound dollar? Is the pound dollar trading at 126? You know, and if it is, then that means it's probably broken. Okay. I mean, here's the pound.
You think 126 would break cable?
Oh yeah, I mean, you know, somewhere down there obviously would. You know, like I look at the pound Aussie. All right, well, you know, does the pound Aussie, you know, come back and see those levels? Well, it's possible. So is it ripe to be bought right now? You know, not for me. And it could go straight up from here, but that wouldn't meet my criteria. For me, I'd rather be a buyer down here. You know, if we could get it. Yeah, we might. And you know, the pound Canadian. I mean, the pound Canadian continues to come in a little bit. Look, nice little rounded top. You know, I mean, this thing could pull back substantially too. So again, I look at all those pound crosses and I think, oh wow, you know, great, but are they ready to be bought yet? No, they're not in my view, and not you know, not setting up for how I'd like to buy them.
You need a big flush. You need a flush.
Yeah, and
be interested again. Okay.
Sure. And or, you know, a flush or, you know, a drift, and that to me looks like what they're doing. They're just kind of drifting around. So it's not giving me that opportunity that I'd like to see. Again, I miss a lot of, one of the things I should probably point out, I miss a lot of trades because I wait for setups, but that's okay. You know, if I'm sitting here waiting for something to happen and it doesn't happen, then, you know, I just move on to the next trade. It's like I look at these, you know, pound crosses and I want them to pull back, but that doesn't necessarily mean that they're going to. It's just, that's what I'd like to see in order for me to be a buyer. So that's why, yeah, I mean, and like I said, you know, we could be looking at like the pound Canadian, for example. This would be, you know, a good example of something that, you know, we could, you know, be sitting here waiting for some sort of pullback, and we may get this, and then it just continues higher. I don't know. It's too early for me to make those judgment calls, and all I know is I would really prefer to see something like this happen. Yeah. And then be a buyer, but just because I wish that happens doesn't mean it's going to happen. Not at all. You know, I know. I wish a lot of things. You know, it doesn't necessarily.
You wish upon a star.
Right.
Yeah. Well, you know, you could always try the cursor technique. Like that's where you put your cursor on the last candle and then move it in the direction you want the market to go.
Yeah, there you go. That doesn't work for me either.
I know a guy, Ron, tried magnets. That didn't work either. So.
Well, right. So right now there's, and I'm sitting here looking like you know, you go over to the euro dollar. It's like, okay, you know, here we are at 127% extension of this last move. Okay,
Yeah.
it still looks like there could be some upside, maybe towards 111. I don't know if I necessarily want to get in the way of the euro right now, the euro US dollar, that is. And you made a good point. The dollar index is under pressure. It looks extremely weak. Is it going to? Yes.
Sorry, it was mostly to test my microphone because there was something wrong. I was trying to speak before as well, before you change subject. If I can interrupt briefly about what you said, especially my fear is exactly the same with yours. Especially you had a look at the pound kiwi before. If you look at it, it looks like it's quite likely that we're getting a correction in time because we get like a prolonged consolidation. And my fear with that is that it may actually not pull back, exactly as you said about the pound Aussie, but the pound kiwi looks very, very bullish. I mean, it looks like chopping around there and unable to come down, and that's quite worrying, actually. I don't know if you agree with that.
No, I mean, if you're short and you're sitting here waiting for it to come down, I mean, it's not coming down. I mean, we could very easily just do something like this.
Yeah.
And bounce here and then take off. And again, that may be something that I'm waiting for to happen, but that doesn't mean it's going to transpire. That for me is something that's very important to understand, that I try to wait for things to happen, but that doesn't necessarily mean that they will happen. And,
well, if Greg is right about his last analysis on cable, it could happen. So, you know, we'll see. I think he has the potential of pound trading down to 126.
Yeah, I mean,
7.5.
Yeah, I mean, and then the pound could break lower. I mean, it's
Oh, I'm sorry. That's for subscribers only.
Oh.
Damn.
But you know, the fact of the matter is that the pound is not breaking 130, at least not yet, but it could. You know, the pound could play catch up to the euro. We've seen that many times. I will tell you that things don't look clear right now. I didn't have a whole lot of clarity yesterday, and I still don't have a lot of clarity today. I mean, the only thing that I really like right now is I like being short the euro pound up here. You know, it's like, because it's done what I expected it to do. I expected it. If you here, for example, this is my analysis from yesterday on the euro pound. Okay, I'm just going to go to basic technical analysis. I'm going to go. You can see the evolution between the 4 hour. Here's from yesterday.
Right.
Okay. And when it breached that trend line, I expected to move up to 86. And if you look at this morning, we're getting close to the resistance. And then you go over to the current look.
Yeah.
You know, we're now there. And so I expected it to come up here. So it is up here. And so I like it when things happen the way that I envision it. But just because it is, but that it happened that way. It doesn't always happen that way. I sit here and, you know, like, again, I'll sit here and go to the pound New Zealand and say, well, I hope it comes down here. That it could very easily do the exact opposite of how I feel, which means that I'll probably not trade it.
Besides the markets, that's a great lesson in discipline. You know, I've talked to people, Blake, and it happened to me this morning. I'm going, oh, Dale, it's turnaround Tuesday. What could be a reversal candidate today? And I'm going from, you know, I got to find something, and I'm going from chart to chart to chart to chart to chart. And if you're in that mode where you're really searching hard for something, there's nothing there. And that means that you just have to, you know, be patient and have the discipline and not try and create a trade out of thin air, because just like this hit you right in the face because you were looking for this rally to 86, then you can act on it. But if you're going from pair to pair to pair and you're saying to yourself, I have to find a trade, don't trade that day, because the great trades will be so compelling, they'll smack you right in the face. If you're searching for something to do, the best thing to do is nothing.
Yeah, absolutely. That's and that's exactly it. It's like, you know, you a lot of times you just have to sit, wait, be patient. There, and we talked about this yesterday. You know, when you don't have clarity, it's okay. It's okay to look at the market and say, God, I just don't really, you know, nothing. I'm just, it's not jiving, because it will. The market will reveal a look that looks appealing to you at some point. I mean, this is one of those longer stretches right now that you know, the last few days where I'm just like, God, nothing's really making a whole lot of sense to me. But that's okay. You know, I know the market will have clarity at some point, and you know, right now it just doesn't. You know, I looked at the, like, you know, I'm looking at the U.S. dollar Norwegian krona. I mean, this thing's breaking down. You look at some of these, you know, dollar pairs that, you know, dollar Swedish krona is approaching support. Dollar Mexican peso can't get out of its own way. The dollar does look pretty weak at this point, and that is a fact, and we need to, you know, recognize the fact that the dollar just doesn't look very good at this point, and it does look.
I mean, look at that RSI reading, under 20. I mean,
yeah,
you know, it's extremely oversold, but that's also an indication of inherent weakness, not just it being oversold. That's
exactly
a pretty ugly reading.
It
and
is.
You know, we're coming up to some key areas that, you know, you know, yesterday Peter mentioned 97.5. Nick has had 97.70 for a while. And God, you know, we're a day away from an important area in the dollar. That 97.5 level is going to be, you know, we start closing under that, and I think the bulls will be thrown in the towel. I'm looking for one more high in the dollar.
Yeah, you know, I look at the dollar. I'm trying not to pass too much judgment here, but you know, you look at the dollar index, and I mean.
Yeah, you've got that line there, dotted line.
Yeah, I mean, that's a 78% retracement. It looks entirely doable about getting there. So again, try not to draw too much conclusions. That and RSI is very oversold, which probably will create some sort of bounce, but the bounce will probably end up being short-lived. I mean, the dollar may consolidate. I mean, we may bounce a little bit here to 98.60, maybe to 99 cents in the dollar index, but what, you know, do you think it's going to new highs just because we had a RSI of being oversold? No, more than likely it's, you know, it's going to do one of these, you know, it's going to bounce here and then probably resume its downtrend here in the next, you know, couple of days. But regardless, you do have to recognize, and I think it's smart that you recognize that it is oversold. So that means if you are short the dollar, you know, long the euro, long the pound or whatever, you know, short the dollar yen, whatever the case may be, you just have to realize that the dollar index is in oversold condition, which could, yeah, it is a bit stretched. So that means it could produce some sort of near-term bounce. Does that mean it's going to be a complete reversal? Probably not, because, you know, but at the same time, it's smart to recognize this, especially if it's affecting the particular trade that you happen to be in. Again, I for one am just paying very close attention to the bond market. The bond market is really important to me, and I think it's really important to the rest of the market as well. How the bond market is holding up relatively well. Because if the bond market starts to rally, that means bonds go up, yields go down. If yields are going down, that typically means the dollar is going down, at least the dollar yen, you know, if anything. So anyway, just some food for thought. So let's see here. And then you got to, and hold on, I'm sorry, I was just looking at the S&P. What the hell just happened? S&P just came under some pressure. Hold on really fast.
Yeah, yeah.
Yeah, I don't understand. I'm trying, is there any news that just came out?
Market just opened. So I don't know if there's...
Oh, okay. Oh, the market just opened. That's why. All right.
Yeah.
All right. It's more of the time than anything.
200 dip.
Yeah, I mean the market. Yeah. So what? We dipped a couple of points in the S&P. It's not going to mean much in all actuality. Probably not. But
by the way, Blake, I don't know if you're seeing this, but having to do with the DXY that you mentioned, and since we know that the main component is euro, I have a serious confluence of resistances here, which usually when that happens, it acts like a magnet around 111.20 and 111.35.40. It's the 1.8 extension of the previous move lower in the triangle. It's at the same time the 61.8 fib from the high we had.
You got to show me. I'm sorry. I'm just looking at bonds right now, Steve. I'm not even paying attention to what you're saying. I'd have to see what you're here. I'll flip over the chart to you. I'm sorry. I was just paying attention to the difference between the 30-year and the 10-year right now. All right, here I'm gonna pull it over to you. There you go. It's coming your way.
This is what I'm looking. Tell me if you can see it. This area, actually, I think it's going to work as a magnet. I mean, I wrote yesterday in analysis that I believe that this zone is going to be tested. And already today's move, I think, shows that we're mostly moving towards that. You see, I have a 61.8 here. I have a 161.8 also from this extension. The 61.8 is from the high we reached exactly a year ago in May 2016, and we also have this horizontal zone. So I think this is a very interesting zone to, to perhaps see some pullback, and as we all know, the pullback in the euro will definitely bring a rebound in the DXY as well. Of course, that doesn't mean it has to be reached today, because we've already seen a big move. But most probably, usually when we have confluences as such, they work a little bit like magnets. I don't know if you agree with that.
No, I totally agree with that.
On the other hand, to give an alternative view, I see exactly what you see in the euro pound, exactly what you see. This is an amazing zone to find the resistance. It's the descending line, it's the 61.8, it's the 200 daily moving average, which we tagged to the pip before pulling back slightly. So yes, being short here makes 1000% sense. But I'm trying to think oppositely here. Being short here, euro pound is a very good idea, and the risk reward is there. Question: what is going to happen if we actually penetrate this very, very strong resistance?
Oh God, it's going to be extremely bullish.
Exactly, and not only that, not only it's going to be very bullish, because then we will be able to interpret this instead of a head and shoulders like a triangle, like a consolidation, like a bullish consolidation after a huge move higher. But it's not only that. The question is the following: what does that mean for the pound dollar? And I'm saying that because some friends may not know it, but the third most liquid FX pair is the euro pound. So what does a break higher in the euro pound means for the pound USD?
Oh, the pound will get decimated.
Yeah, it depends on what the dollar...
At least get that 26 level anyway.
Exactly. Yeah. So imagine, that's what I'm thinking. What worries me with the pound USD, you remember we saw that the day before yesterday, Dale, is the fact that we made a second failed attempt at near 130 level, and we moved lower. Now we're retesting support. Is this thing bearish? No, not at all at the moment. But the fact that it fails to press higher is worrying me very much. So what's going to happen if we get a breakout of the euro pound, and at the same time we see the well-expected bounce in the DXY? In my opinion, that's when we get what Grega is expecting, a move lower to get rid of some of the late longs in the pound and perhaps retest, for example, this trend line here.
So you put that together, Steve, what you're saying with euro pound, if it breaks out, what Blake is saying about the bond market and the correlation to the yen, and the guppy could be a very nice short up here that with that combination, right? Euro pound breaking out and the bonds being bullish. So that's why I'm focused on this guppy potential top here, double top. You know, it's a tight risk reward over 48. You get out of the way, and you know, that was one hell of a move, and just a normal retracement could be a decent trade.
By the way, let me also give you a nice technical reason for a potential breakout of the euro pound. I reiterate here, what Blake is seeing has to be considered for the time being the main scenario, right? I mean, the euro pound, if you look at the structure, is not yet bullish. We haven't had a higher high.
Right.
We are indeed testing the confluence of 3 different resistances. So I'm not suggesting that the main scenario is being bullish, but I'm saying that if we break out from here, it's going to be bullish. And look what I'm seeing here. Isn't this a potential inverted head and shoulders?
And no one's talking about that head and shoulders. Everyone.
And by the way, look where its target is at 87.30 here.
That's one of Nick's longer-term targets.
Oh, okay. You see, without even knowing, we just have some confluence there.
Yeah, I saw it on Skype. She said it could go there on Skype this morning.
Okay, so if we break above here, I think that a retest of this broken trend line should then be considered a buy for a target of at least there. And I think somebody should be very, very careful being long the cable. I mean, if you want to be long the cable while we have this breaking out, you'd rather consider switching to being long the Euro USD or short the USD CHF instead. That's what I'm saying.
Yeah.
I'm saying that being long the cable will not be the best trade afterwards. I mean, there will be better alternatives.
Yeah, I mean, this is so true, because if the euro pound gets hit or continues to rally, the pound will be out of favor almost across the board. And that is going to be a big hit to any cable longs that you have. Period. End of story. 100% agree with that.
So here we are. We're at the crossroads. And
we are.
We'll know in the next 48 hours, I think.
Yeah, I mean, I agree, and I think we'll have a really good indication of how the pound's gonna react moving forward. So, but that's what I'm looking at. Steve, what else are you looking at that's on your radar? I mean, S&P just hit new highs today, and then they've turned right at the open. It kind of might have flushed some near-term shorts out of the market.
By the way, Blake, just because you mentioned it before, let me show you what I see in USD SEC.
Wow, descending.
I think that this level is of paramount importance. A break below here is extremely, extremely bearish for the SEC.
That's a big descending triangle, Steve.
Yep. And look at it, how long this support zone goes back to the beginning of 2015. So it's like around 27 months old support level. I mean, you want to be long the USD SEC, this is where you do it. But if it breaks below, you'd better run for cover. And as Blake already said, USD NOK is already perhaps leading the way. I was monitoring this as an ascending wedge. That broke down. Then we were monitoring the channel. This seems to be breaking down as well. And then what do we have? We have this ascending trend line. If we break below this, you see how long it goes back, eh? It's an inside, exactly. We tested it here, we tested it here, we tested it there twice as resistance, we tested it then here as support. So, and it also coincides with the 840 zone. 840 zone within this huge consolidation is one of the zones that has provided us with support or resistance multiple times during this whole choppy festival we've had with USD NOK.
Steve, if you put the USD SEEK up there one more time, it could bounce from here.
Oh,
but,
yes, it can.
But if you look at that, to me, being a little jaded, you have 1, 2, 3. This be the fourth test of a breakout. You know, Mr.
Right.
Market saying, okay, the way breakouts usually work is you see when it first broke out, then give you a chance to get in. Mm-hmm. It just kept going. Then we came down, had one test, had a rally, and they said, oh, you know, you missed the first breakout. It ran away from you, but I'm going to let you buy it once, twice, 3, 4, 5 times. I'm going to let you buy a breakout in a 5-month period.
And not only that,
I don't trust it.
You're saying, look at the latest bounce from this trend line.
Weaker and weaker bounces.
Exactly. It's much, much weaker. I mean, it didn't have the momentum it had back then.
Yeah.
So I don't know. I mean, this market having to do with the US dollar looks to be in trouble. We don't have a breakout yet, but it really looks to be in trouble. I mean, it looks one of the really weak pairs. And
my point being, the real good breakouts don't give you a chance to even buy a retest, like the initial move last fall. You didn't have a chance to buy it. And now you're getting multiple opportunities to buy that level. It reminds me of what happened with crude when it was over, I don't know, 50, the big breakout over 50 before the big sell-off. Yeah, same thing.
Thing that worries me about the dollar is you got you know the Fed, which is trying hard to normalize policy, but the dollar is becoming unresponsive to it, meaning that you start looking at other central banks that have to play a little catch up, and they may have to start tightening rates and monetary too. The Riksbank, they have their rates negative, which if they start to normalize policy, I mean, you can see a pretty big sell-off in the U.S. dollar Swedish krona. I think it'd be a great setup for a short, personally. Yeah,
and to extend that argument, Blake, imagine about the Norges Bank that they've been overshooting inflation, etc., and they're still playing smart. In what sense? They've realized that the market, if they seem like willing to tighten, etc., the market is going to jump all over the NOK. You know how it works.
Yeah.
So they're trying to control the currency under the table. They're constantly attacking the currency, especially against the US dollar and the euro, because those are the two main components, of course. But at some point, they will have to have a stronger currency, simply because Norway is doing much better than many other countries. I mean, the market is not going to be ignoring that forever.
We've said that.
They also have a great hockey team. They always have very good hockey.
Speak a little bit louder.
Yeah.
I was just going to say.
Hey, it's Stelios.
Hey, everybody. I mean, I go crazy with Norway all the time, but we've said this so many times. And if you look at the long-term, Norway against euro and dollar is still really near the highs, and I mean low in Norway, highs in the other currencies. So they can afford to let the currency appreciate back to even neutral levels. This is still very high. Euro NOK and USD NOK is very high compared to historically where it's been. And as Steve correctly said, the country, Norway, is doing well. Their only problem is that they're sitting on a lot of oil, which is that the problem? But yeah,
I think it is a problem.
Really like. It is a problem. But
if there's somebody that's going to take out Tesla, it's Norway. Tell you.
Yeah, but it's it's 20% of the GDP, so it's not they're not like the UAE or something like that. It's a big component of their economy, but it's not everything. But
those guys have been smart and have been piling for years their oil profits to the sovereign fund, which now controls roughly 2 to 3% of all stocks on the planet. Yeah. So they've been smart to diversify the income of a fossil fuel source that they knew in advance that's not going to last forever.
Yeah, and I don't know
So
if you guys
they have one of the largest sovereign funds, Steve?
Oh, yes.
It is the largest one, isn't it?
It is the largest. It's not one of the largest. It's the largest.
Oh,
Yes.
so is that why Blake said they're going to take out Tesla? They could buy Tesla and take it over.
No, they're gonna firebomb it. They're gonna blow up some plants.
You know something, Blake?
Maybe that's why Musk is building spaceships. They get away. What do you think?
You know something, guys? You have to give credit. Norway must be one of the most ethical countries I've ever seen. I mean, I don't know many people from Norway. I have a friend from Norway, but it's not that I know like plenty of people. But I can tell you something. What can you say about a country? First of all, that has been very prudent with handling its economy. Second of all, that has a sovereign fund that has made its money from oil and are investing a lot in green enterprises, and they've actually started removing from their investment targets anything that is polluting the planet, in the sense that at least they want to give back and they want to lead into the future in a more green planet. So not only they recognize that the future has to be using much more greener technologies, but they're actually embracing that, despite having a huge part of their income coming from that. I mean,
they're a model for some Middle Eastern producers are starting to follow what they're doing, right?
Exactly. Steve? Instead of buying golden cars and diamond necklaces and whatever, you can actually make good use of that money and build something. I mean, start shifting your economy so it can go through the next phase, because sooner or later there will be a future without oil, or anyhow with a minimum usage of oil. It's not going to come tomorrow or the day after, but slowly, step by step, we're heading towards that.
Interesting discussion.
Yes.
In the meantime, that candle looks like a failing rally to me. We'll see.
This one, yes.
Yeah.
It does. I mean, it started out very bullish today. We had a very fast retracement in the Euro NOK.
What was that? 61.8 back from the break, that high today?
Just eyeballing it, I would say that it has to be between 50 and 61.8.
Yeah.
Hey guys, I got to take this phone call. I'll be back. All right.
Okay, thanks, Blake.
So let's see. Steve. Just by eyeballing it, I would say, yeah, I was right. It's between 50 and 61.8, Dale.
Okay. So, Steve, what are you doing with Canada? You sticking with it and pulling stops down, or are you out of the way?
No. I'm still in it. Yesterday I was considering what I would do if we actually sustained prices above 36.50. I would take some profits, but I haven't taken profits yet. And
we
I
can
think
still see that line on Canada that you had there.
But let me do it on the right
Where
side.
was that line?
Okay, use the CAD. There we go. There we go.
The blue dotted line. Either
Yes.
the trend line or the blue dotted line.
Yeah, or this level first. It's what I'm looking, 135 to 135.20.
Yeah.
But for me, none of that levels matters at all until I see the break below 136.
Yeah, I think you may get it today.
Yeah, and you know something? Perhaps what we got yesterday, and I don't even need to move to the 4-hour chart so you can see that, because it's quite obvious.
Yeah, that flat breakdown at 36.5. Oh, okay. Yeah.
Look what we got yesterday.
And look how it's respecting it. So, yeah, right above that high, you get out of the way.
Exactly.
Above today's high.
Exactly.
Yeah.
Exactly. I think what I'll just do is move the stop loss to the whole position above there, because if we break again within that triangle, and given the shallow retracement, I'm not going to like it anymore. So, there I'll book, if it breaks above there, I'll book like 120 pips to the whole position and, call it a good trade, a decent trade. Good trades move a lot more, but still, it's a winner, isn't it?
Yes, it is. Better than a sharp stick in the eye.
By the way, oil is still attacking this confluence of the 200 and the 50 DMA. To be honest, I would have expected that it would be very likely for us to stall here at a retest, but it seems that at least briefly we've broken above it. Although, to be honest, we have not closed above it. Yesterday we did not close above it, above this confluence, and today we might end up, I mean, if we turn lower today, it's actually going to be very worrying, because if I zoom in here, it's obvious that sellers stepped in around here. We closed at this zone. If this happens today as well, we will also have an inside day, because we haven't managed yet to penetrate above yesterday's high. So if we get a selling pressure later today and we end up failing once more to close above here and form an inside candle, then I would be very hesitant being long oil. I mean,
if anything, just to correct the bounce that the $5 rally we've had, $5.50 rally, why can't we pull back $3 back to 46 and then attempt another rally, maybe get a B wave or a 2 if that turns out to be major?
Listen, we can definitely do that, but no matter how you look at the market, you can always call for the next move to be either impulsive or corrective. So zooming out and seeing this, I would be very hesitant a failure here. Yeah, I would be very hesitant to buy a pullback after seeing the clean break below here.
Yeah, and I don't like the RSI reading at the low either.
You're very right, because usually
it was a confirmed low.
You're absolutely right. Usually in strong bull markets, I'm saying that, you know, for an educational reason to listeners that might be more fresh to trading. Usually in a bull market, you want to see RSI support at levels around 30, 40, and even if we break below 30, you want that to be very, very brief. And the opposite stands for bear markets. I mean, you want to see resistance at 60, 70, and rarely see a break. I'm talking now about the daily chart, because obviously if we're talking about 1 hour charts and 15-minute charts and 4 hour charts, you're going to be getting oversold and overbought levels, even counter trend. That's why I like the longer time frames like the daily, because it filters out, you know, a decent amount of noise. That applies to the RSI as well.
Okay.
So as you very well said, this RSI here is troubling. You rarely see an RSI of 19, 18, whatever the hell we got there in a bull market. Rarely. Not impossible, but rarely. And on the other hand, to display what I was saying, look at us breaking above 52. We never even
see, that was a breakout I was talking about. They gave people multiple chances to buy the breakout.
Exactly.
Even buy
but look at the RSI. Look at the RSI.
The breakout. Yeah, I see that.
Look at the RSI. It never penetrated 70. Never.
Yeah,
I mean,
that's weak.
That was worrying. Yes, that was weak for a bull break. I mean, a bull break should see acceleration, a very high RSI, and then give you some kind of an opportunity to enter back. For example, let's have a look, because somebody was asking. Look at the euro yen, I mean, look at it. Obviously, as it seems, perhaps what the case might be here is something like this, by the way. So this is now a likely scenario. So look at it. We change the trend. We come, we test 70, we retrace very briefly. I mean, we barely dip. Then we penetrate 70. Then we find at RSI 70 support, and now we even break higher than that.
Yeah, and it's confirming the high on all time frames.
This is the kind of RSI behavior. Yes, this is the kind of RSI behavior you want to see in a strong market.
Okay, I'm going to take just a quick break, and I'm expecting Chima Nuo to be with us, and we're going to talk a little bit about automated trading for
Perfect. That's going to be very
cool.
By the way, before you take a break, let me say to our friends that we already have the winners of our giveaway competition, and the blog post is going to be uploaded within the next few minutes. We've had actually 7 winners instead of 6, because we had a tie at the 6th place. So we're gonna link the URL to our Twitter account, so you can go in and see. I mean, some of the pictures are really funny, etc.
I wonder whose desk those silver dice are going to be on.
You already know the answer. You had to vote for that.
I wonder who's going to become a top trader with silver dice that tell you when to buy or sell. That too could be automated trading. What do you think, Steve? Automated trading with silver dice that say buy or sell.
Exactly. You just have to throw the dice. Everything else happens on its own.
Yeah. Okay.
Perfect. So I'll be waiting for the interview, Dale.
Okay. Well, all right. Thanks so much, Steve. Some great analysis, some great banter. You know, I am going to take a break, but I got a great tweet yesterday about us being the best free Forex room for FX traders on the net. And then I asked what the favorite part of FACE was. And Melinda, I believe it was, who's been following me a long time, said that this is her favorite part, is when, you know, Blake and you and me and Stelios and when Grega comes on and Nick comes on, is the discussion between traders. Because normally it's one trader, you go to a webinar, it's one trader talking at a time, maybe it's interactive with attendees, but you rarely get this type of banter between, you know, pretty good analysts. So that turned out to be their favorite segment. You know, a lot of people love the interviews, a lot of people, you know, like the community interaction, but I thought it was interesting that that was the favorite part, was when we have the back and forth going between all of us.
And to be honest, we enjoyed as well. It's not only that, we enjoyed as well.
In fact, Chima's in the house. I'm just going to take a break for 3 minutes, guys, and okay. I'll be right back.
3 minutes. Thank you, Dale.
Okay. You could keep talking for 3 if you want. I didn't put the sign up, but yeah, I'll be back.
Okay, I can use the break as well. So,
okay.
See you in 3. Okay, perfect. Hey, Chima, I see that you wrote that you're on. Dale is going to be back in 1 minute, and you can start. By the way, I see a friend here asking about the DXY, if it's in a similar correction and if there might be a leg higher in the DXY. The answer is that yes, we still have the potential of seeing one leg higher. And we might be in a correction, but for the time being, the only thing we can say is that we've broken all significant supports that are nearby, and the next support I have on the map is at 97.58, which is somewhat lower than we are at the moment. So I mean, if we are to have a reversal, we'll need to see the equivalent price action. But I think we will first move a little bit lower before even attempting to do that.
Okay, Chima, I'm making you the presenter right now. Looking forward to hearing your voice and your screen. Everybody, FACE community, welcome Chima Nuo. And
hi,
hi, Chima. So nice to meet you. Thank you for taking time to be with our community today.
Yeah, send me a Dale. Send me a Dale.
And
how we all doing?
Your Twitter handle is at Sakal Consultants, S-E-K-A-L Consultants, correct?
Consults, yeah, consults.
Consults, yes. Right. So I'd like to, you know, have you step into a time machine, Chima. And, yes. You know, I have a suspicion that you came from maybe an engineering background or something, just a guess. But you like to code. I know the engineers are very technical people and perfectionists, and everything has to be right. Is that a correct guess that you come from that background?
Yes, yes, I do.
And you didn't tell me this before the interview, did you?
No, you did. I didn't. No,
okay.
No. Yes, you're absolutely correct. I do code my my trading systems and tools. And what
before you started trading, though, tell me how you tell me about the transition from being an engineer, and I'm sure you were involved in other kinds of projects before you got into the trading world. What brought you into the trading world?
Yeah, my background is in chemistry. I'm trained a chemist, so I have a BSc in chemistry.
Okay.
And I've always worked in manufacturing. So I started off as a quality person, quality assurance chemist in a foundry, actually, where we made ferrotitanium, and then worked in oil and gas, still within the quality assurance. I became quality manager for the business, and looked after 2 sites in the UK and in the Netherlands, looking after management systems and things like that. So this is where my system thinking came from.
Okay, and what attracted you to the trading world, and what was your initial, say, 6 to 12 month experience like?
Right. My initial interest into trading was way back before I even got into school. I just had this desire to work with numbers, and as well with the concept of you not actually starting up a company, but you can own part of the company, if you get what I mean. That really excited me and got me into thinking about how I could do that. But sometime in 2010, October 2010, I then started to get involved in Forex. And how that started was I was setting up one of my websites, and I saw an ad on the, I was setting up a Google ad on my website, and the first ad Google puts up was something to do with Forex. And so straight away, because I already had the interest, I clicked on it, and then from that point, I just got hooked.
Okay.
So for 7 years. So you asked how was my first 12 months, or how my first 12 months. Really, the first 12 months were try and error, making mistakes, losing money, blowing up small accounts, like everybody else will do. Up until, I would say up until 2013. So 3 years really, on and off. I was
that's such an interesting number, because so many people have expectations that within their first 12 months they could become a successful trader. And my contention is, you go to a university, it's 4 years for an undergraduate degree. If you have any kind of trade, you're a carpenter, you're a plumber, you're an electrician, you're an apprentice for at least a year or so. Before you become a master, you even have to be a journeyman. So it's interesting that before you made a breakthrough, it was almost 3 years. So I bring that up so that people can learn to be patient with themselves and not have unrealistic expectations that right out of the chute they're going to master it, because you can't learn experience. You have to live through all those things for you to progress. And you could probably have your learning curve expedited. You can't learn experience, but you can learn from the experience. So great story, and it confirms one of my beliefs that it takes people longer than they think to become proficient. So.
Yes, my take to this really is using 2 words, content and context. What people tend to get in the first few months, weeks, months of any endeavor is content. So people learn a lot of things, they get a knowledge, but knowledge actually doesn't make you become successful or great at what you're trying to do. It is the ability to take the content, the information you're picking up, and then put it into different contexts. That's actually what makes you eventually become successful. And context doesn't come immediately. Context comes with experience.
Screen time.
So
screen time. In our business, that experience is screen time. So it looks like you prepared a very nice PowerPoint presentation, and maybe we could start to move to your slides and talk about what you're doing now. Thanks for your history, and I think that was a great guess by me, although it wasn't exactly true. You're more of a chemist than an engineer, but you're a chemical engineer, so why don't we go to your XGen breakout system? Looks like it's your next slide. There we go.
Yes. Really, before I get to that, I'll just use the first 5 minutes to lay some foundations, and basically this is it. This is actually my story. I already told it, so I'm just going to breeze through this. This is what I call this a Forex trader's blueprint. And everybody starts off, and this is not just particular to Forex, it is also for trading in stocks and all that. Everyone starts off with an idea of making lots of money very quickly. But the reality is it's a journey. And the first decision everyone makes is I then commit my money into this. Usually for most folks, they have the initial win. And once you have that win, that can be absolutely confusing because you think because I've won, I can do it over and over and over and over again. But what tends to happen is you get the inevitable loss. And for some folks, that loss is actually what sinks them. For others, the loss isn't big enough to sink them, and they continue to look for people to help them. This is where they start to look for the gurus. They start to look for the signals to copy. But then that doesn't really help you. I remember when I did this myself, I copied a few gurus and I was still not making money. And I was still making a lot of losses. And this is where a lot of folks, again, at this point, people drop off. But at this point, if you really want to go on, you start to ask the question, show me how to do it. And this is what then leads folks into finding platforms like yours, the Forex Analytics, and where you can actually get training that is real, not promising things that are not realistic. And I say this because I've watched several of the videos from FACE, from previous interviews and webinars, and this is proper learning.
I think everyone could see themselves going through all these different stages. That's really a beautiful slide.
Yeah, and for me, you need to get to the point where you then become an independent thinker, to a point where you understand and accept that there is this paradox in trading, which is there will be losses and there will be profits. Both are just events that just happen. But what you want to be able to do is to have bigger, consistent profits and fewer, smaller losses. They both happen, both are events, but you've got to have the edge in your favor. And I think that's hopefully what your platform helps traders to do. And I must say this: thanks for what you're doing for the trading community, and because it is good stuff. It's good stuff.
Oh, thank you so much. We have a pretty good team here.
Yeah.
So okay, so here we go. Now you have your triangle.
Yes, and this again is what we know. Everyone that has been, especially on a platform like this, would have heard that mindset is the biggest criteria for a successful trader. And then the next thing is systems and techniques, where most folks, when you start out, you think that techniques is all and all. Techniques and systems are just 10% of it. And the other bigger criteria is your money management. And for me, the key thing about money management is the top of my list is where is my exit? Yes. Until you understand your exit, where your exit is, you can put on all the trade sizing, right? You can have your risk management in place. Until you know where your exit is meant to be, you can still be losing money. So the first thing to find out is always, where is my exit going to be? And then you start to work around my trade sizing and risk management, which are absolutely important. They are all part of the money management technique.
It's interesting that you put money management at 30 and psychology at 60%. A lot of people would reverse that.
Yeah.
They'd say, I mean, the typical statement is risk management is everything. And you place more value on having the correct mindset in psychology. Why?
Because this comes back to the point about in the previous slide I had, where you get to that point where you understand that you can control your emotions while trading. You know when to cut your losses. Even though you've got your stop loss in place, you know when to cut your losses without emotions coming in. You know when to leave your profits to keep running. Even though you've got so much money on the plate, you don't want to cut it out. It is you need to master that, master yourself, master the emotion to be able to do that. And without a strong mindset, healthy mindset, you cannot do that. It's impossible.
How about if you have a spouse that knows when they should take the mouse away from you and put it in the wall safe?
That itself is, and this is the point, absolutely, Dale, absolutely, because this again is where I know there is a lot of argument about the place of automation in trading, but this is where automation also helps a lot of folks where they cannot control emotions. Automation sometimes just takes, like you said, take the mouse away and say, just,
yeah,
you know what I mean. But anyway, this is the way I see it. I believe mindset is 60%, money management 30, and then techniques 10.
Okay, we're with you. We're with you.
Yeah. And now, okay, now this is the let's get into the main thing really. And to talk about this really is to start with trading sessions. Now, the ERXGen breakout system, which you'll see in the next slide, is basically early riser next generation breakout system. It is based on what the popularly known London Open breakout, but I've got some optimization filters that I've added to it that just increases the edge or increases the probability of win for me. And I use this technique is one of the day trading techniques I use. I'm kind of more or less a medium-term trader, but I do have one or two intraday techniques that I use, and this is one of them. Very interesting, and I'm sure you will pick up one or two things from this. And what we see from this is we all know that in Forex trading we've got four, but some people call it three, but four major sessions. So we've got the Sydney and the Tokyo sessions, which are usually regarded as the Asian sessions. And then we've got the London session and the New York session. And as we can see from the chart there, most of the transactions actually happen around the London and New York session. And what we tend to do with the ERXGen breakout system is just take advantage of those, high probability or high volatility periods. And if you notice, we can see this here. Boom, price just breaks out there, price breaks out there, price breaks out there, price breaks out there, and these are 4 days, consecutive days, and this happens practically every single day. But the question is,
one of those rectangles is a different session, geographic.
Yes. Yes. So this is a complete 20. Sorry, I have got to clean that now.
Yeah.
Take that out now.
Because I mean, just from being an observer, I always thought that most of the important reversals happen in the London session, but then the U.S. session reverses that at times, turns London around. Have you noticed that?
Yes. If you notice on the second day here that is on this bit here, you can notice that this happened during the London session. So the up move happened during the London session, and for most of the New York session, you can see that reversed back down. Yeah. So technically, it does happen that way. Look at the fourth day as well, the same thing, and reverses the during the New York session. But during both sessions, you can have days where during the London session is very quiet, very low volatility, and suddenly during the New York session, you get a breakout. And I must say, it's good you asked that question. I must say that I do not trade this system past 4 p.m. UK time.
Okay, and why is that? Because it thins out, volume thins out, most of the moves have already happened. Yes. And people are just picking each other's pockets then.
Yes.
Okay.
The system, the strategy is as I've already explained, that what we tend to do is monitor price action during the Asian session, and so from 0:00 GMT to 6 a.m. GMT, and just monitor what's happened in that period. And we've got two entry techniques, so you can either be aggressive or conservative, again depending on what the preference is for the trader. For the aggressive technique, the trader just places a pending order on either the Asian session high or Asian session low, and once price breaks it in momentum, we get filled in. And this being an intraday session, the basic number of pips that we look for is anything between 10 to 25 pips. But sometimes, again, depending on the money management and trade management technique we are employing, you can actually get up to 50, 100 pips in certain cases. But really, this is between 10 and 25 pips, and very quick in the day.
So I would call this your scalping system.
Yes, yes.
Okay.
And then the conservative price breaks, then retraces back to retest the Asian session high or Asian session low, and then continues in the direction of the break before you can take a trade. Now, the 3 rules. Now, this is where anyone that has said about the London Open breakout would have said what I've said so far is common knowledge. But this is the point where I've got the 3 rules that or filters that help me increase the probability of wins on this. Now I've got 3 rules: intra-week trend, tight price action during the Asian session, and the position of the Asian session price action. And we'll get into that. We all know that there are only 3 things that can happen to a trend. So once I've noticed a trend or found a trend on any asset, there are only 3 things that can happen from the point I find the trend. The trend can either continue to move in the direction that the preceding direction, it can reverse in the opposite direction, or it just ranges about certain levels around that same point. These are the only 3 things everyone knows that can happen to a trend. And what I tend to look for in for this system is I want to see 2 consecutive days or 3 consecutive days of trending. So it can either be bullish trending or bearish trending. And as you can see, this is just to explain that yes, you will get 2 days. We had 1 to 3 days, and then we had the reversal, and then we had the price move in that direction, and then reversed again, ebb and flow in the market, and all the system tries to do is to take advantage of that.
Let me ask you something, because I'm a big proponent of 3. Do you see threes popping up in your work? You just showed 3 days before a reversal. Is that a common pattern? I just love 3. I mean, to be honest, just like yourself, probably. I just love 3. I find that you can. Someone talks about triangulating. As long as you can triangulate anything, you can find a solution to the. If you have a problem and you can triangulate it, you will always find a solution. So it's just a mindset. There's this thing about 3 that just makes it easy to. Okay. Thank you.
Yeah. All right. Now this is the rule. So in reality, what I do is I have this indicator that I've written that just helps me, makes it easy for my eyes to pick up these trending situations in the market. So I follow 3. You've got the 3 boxes there that lets me see the 3 days. One can also use a normal MetaTrader for or any other platform separators, period separators to show the days. But I use this system to just make it easier for my eyes to see whilst trading. And so what we have here, the 3 days, a 3-day intra-week trend. So 3 consecutive days of bullish and bearish price action. And here we have 2 days, consecutive days. So from the current day, previous day, and the day after must be either bullish or bearish. So being 2 days. And that's for rule 1. Rule 1, I must have either 3-day or 2-day trending situation. And then rule 2, the Asian session must be tight. And what I mean by being tight is probably, first of all, I will explain the periods of monitor. It has to always be GMT. So it's 00 GMT to 6 a.m. GMT. And we just monitor what price has done in that period. And if we notice here, the first candle 00 formed the low of that period, and the final candle here in this case also formed the high of that period, and we just draw a line for the Asian session high and another line for Asian session low, and wait for price to break either of them. And the point where price breaks, we want to look for 25 pips. I usually do 25 pips for 50% of my trades and wait for the next 25 pips for a further 25% of my trade, and then we just trail the stop loss.
Okay,
until
so you take partial profits on this.
Yes,
That's
sequential
25.
profits.
Okay.
Yes. I'll show this a bit.
You make sure you get paid.
Yeah, absolutely. Absolutely. Right. Don't do all the work and don't get paid. Yeah.
Yeah. Okay.
So that's rule 2. Now, what we want to see is something like this. We want to see something like this. So tight. We don't want to see anything like this. This is too wide, which means that price has already moved all, as it were, is moved most of the action during the Asian session. And one key thing to always keep an eye on is the average true range. And whilst doing this, if price has already moved during the Asian session for most of its average true range, I don't usually get into any trade, intraday trade on that. I'm out.
So
I don't. Yeah,
your ideal setup is very tight, narrow ranges in Asia to be traded in London.
Absolutely, and that's rule number 2.
Okay.
Rule number 2: we must have a tight Asian session. And what I mean by tight is I want to look for less than 50% of the ATR movement. If it's more than 50%, I'm not in, I'm out, as it were. And these are the sort of things I want to see. I want to see something like that. So tight range there, a tight range there, and the third one as well. Those are the sort of levels I want to see. Sorry, this is rule number 3. That was rule number 2, which is a tight session. Rule number 3 is the position of the Asian session with respect to the previous day. So we can see this is a current day here, and that's day 0. And the current day and the previous day is day 1, and the day after that is day 2. I want to always see my day 0, which is the current day that we're at, to always be either at the top area of the previous day or somewhere around here. And what I usually say is anything above the top 30% of the previous day range or 30% below. Now, there's a lot of maths dropping into this, but because I do a lot of coding, I need to be able to do that. But in reality, just use your eyes, and as long as it is within the top level of the day or at the bottom level of the day, that's fine, and it should be a tight range.
Okay.
And I've just done this here to just show it as an example. And why do I do that? This is key here. Why do I do this? You must realize that the OHLC, so your open, high, low, close, your high and the low of the previous day are usually, and the close, are usually levels of support or resistance. And this being an intraday session, I want to be able to take some profit before I come against one of those levels. And so if the Asian session forms at the top, in this case, the high will be somewhere there. I've got this distance here to move before I hit the low. So there is a higher probability for me to make some pips. I'm looking for 25, 50, 75 pips, but 25 as a minimum to take my 50% of my trades off the table. Yes. So that gives me the opportunity to do that, either top or bottom. Key factor there.
Okay.
And that's just showing examples of rule number 3. They should be at the high or the low of the previous day's session. And now let's look at some examples. This was on, let me see, this was on the 4th of May. We had this on the 4th of May, and this was around 8:20, I took the screenshot. Now we had 2 days, so day 0, day 1, and day 2. And we had 2 days, day 1 and day 2 were bullish days. Price opened here at this point and closed at this point. And so it was a bullish day. It's not massively bullish day, which is why it's gray. But we have 2 days consecutive days of bullish price action. And on the current day, we have our Asian session high, Asian session low, and we see price broke this, and boom, we went to the upside. What I also do here, the currency pair on this was Euro AUD, and we can see that here, the Asian session range was 57 pips. So this range here was 57 pips.
Okay.
And the 20-day range is 114, and the range on that current day was 182. So we had about more than 2 times the Asian session range to make profit.
Nice.
In that case. And the second example,
I like the simplicity of it.
I think I just like to have a clean chart. I do have all these lines, and probably I should talk about that now. I do like to see the pivot levels, so the daily pivots whilst I'm trading. And so this blue line, the blue line here is the daily pivot, and that one there is the previous day's daily pivot point. The red line there is a resistance 2, S2 level, and that's an R2 level, and that's an S2 level here, and the green one. I also like to have the round numbers on my chart. Again, all these things, this is why I say I automate my trading. All these things are coded. I've got codes that actually draw this thing for me.
So someone who buys the software has all of this appearing on their chart.
Someone who buys this software, the ERX Gen software, no, just has the ERX Gen software. These other ones are separate indicators.
Okay.
And by the way, the ERX Gen indicator is a free indicator. So guys, go get it. It's free. It becomes a paid utility when it's the automated trading software, as it were. But the indicator itself is a free software. And
they get that at the website 5talentstraders.com.
Trader.com. Yes, they can. Folks can get free copies from there. I also use round numbers, like I said, and then you can see the magenta line there, the purple line there. Those are you've got a thick one and you've got a very light one broken there. Those 2 lines actually represent, when I say those 2 lines, they are multiple on the chart. They represent longer term levels of support and resistance. So it's able to pick up levels from the weekly and the monthly time frames, and then just draw lines on the shorter time frames for me at levels where price can actually retrace. We can see, not on this particular chart, but if you look out here, you can see that price was hovering around that level there. That was a near-term level of support and resistance, again automatically drawn on the chart, and this updates itself automatically on a daily basis. So every single day it redraws the lines to just make sure that I've got the most up-to-date levels on my chart. And so that's an example. In this example, all my rules were not met. If you look up here on the left-hand side, you see that the trend was met, uptrend. The range was okay, but the position was not okay, because if you look at this level here, is almost 50% of the previous day. So this was not a valid trade for me. I did not take that trade. However, if you look at it, that would have still been a successful trade. But the point is this is the point about emotional control. If it doesn't meet all your rules, do not take the trade. Just leave it for the next day or for the next one, as it were.
Great point. Even though it was a winner, it was still right not to do it.
Yes.
Because if you start breaking your rules, and some of them work out, you just not become a system trader.
Yeah, and as well, what you become then is you're dropping your standards. And once you start to drop your standards, you start to accept anything. And this is where the problem starts from trading. You've got to have your standards where your rules are. Follow those rules. Is my simple way of looking at this. A third example from the 4th of May, still on the same day. Again, similar thing, two previous days of bullish price action and price breaks. It was 65 pips range, and the range for that day was 159. So there was an opportunity to take two times the stop loss on that. And notice as well, you can see this line here, the red line, that is the resistance level 2, R2 level, and again automatically drawn on the chart, and we can see price got to that
right
point.
To the pip. Yeah.
Right to the pip and touched it and came back down. And the interesting thing is, at the start of the day, before you see all this action set up, those lines are already drawn. So you see those lines even before anything happens in the day.
Right.
And so you're able to know what levels you could potentially have reversals, and then you can make those levels your profit levels, or levels where you take most of your trade off and just leave a bit out because price can actually break those levels.
What a great presentation. Really interesting presentation.
Yeah.
You want to show your website and how people can get a hold of you, because we're starting to press up against the time. Oh my gosh, you had a one heck of a presentation.
No, that's it. This is 5 Talents Trader, and that's me. So I've got the you can reach out to me. You can get contact, hit the contact menu, or go through Facebook, Twitter.
You know what you proved, Chima? And I'm so glad I reached out to you. You know, a lot of guys that do interviews, they want to, only interview people that have 40, 50,000 followers because it's going to generate traffic. But I'm a big believer in holding people up and giving them a chance to have visibility, and not based upon how many followers they have. I'm so glad that I reached out to you for you to give us this demonstration of your hard work, your dedication to trying to eliminate emotions by using something systemic. And your slides were great. I want to thank you for your time, for coming here to address FACE, and really was a great interview. I hope you enjoyed your time here.
I did, and thanks again to you. And just 30 seconds, just to show in real time. This is real time now. USD CHF. We can see today we had a notification. We had all 3 of them okay, and we can see what price has done. So
you had a big day short side of Swiss with your rules.
Yes.
Nice.
Yes. So, so thanks again for giving us
Chima, thank you so much. I encourage people to check Chima out. Sometimes, when I was kind of a cynical guy, Chima, you know what I used to say about systems?
Yeah.
The systems are for people who don't know how to trade.
Yeah.
But I've changed my view that systems are great for people to help them maintain their discipline by having a rules-based way to trade. And it helps eliminate the emotional decisions and the FOMO, fear of missing out, and all of that. So congratulations on what you've developed. I wish you all the success in the universe.
Thanks, Dale, and I will always be in touch. Keep doing what you're doing and keep helping traders out.
All right. Thank you so much, Chima. Everyone thank Chima for his presentation. Everyone knows how to reach him, and you could follow him on Twitter at Sekal Consults, S-C-K-A-L Consults, C-O-N-S-U-L-T-S, and at www.5talentstraders.com. The community is thanking you, Chima. Good hunting, buddy. I'm proud to call you my trading warrior brother. How about that?
Thanks a lot, buddy.
All right.
All right.
Okay, everybody.
Yes, see you guys later then.
All right, and that's a wrap for me and the FACE session. I want to thank Blake and Steve and Stelios and the community and everybody for contributing to a good session. If you notice, the guppy is selling off. We talked about that. I still think there's a lot of downside left in it. You know, if you took it from 37, you have a nice trade going. Don't chase it though. I'm sure there'll be some rebounds. And that was the guppy. And then we'll take a look at pound Aussie tomorrow. And I have an excellent interview tomorrow. I think tomorrow is Greg FX. Yeah, it's Greg Michalowski's going to be with us tomorrow. So everyone have a great day. Remember, don't just count your pips, count your blessings. And I count working with Blake and the team and you guys a blessing in my life. So you guys are counted. Adios.
Thank you.
Thank you, Gina. See you, Russell.